Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol & Associates Asset Management. Well, all I can say right now is that this has been one nasty week for the FANGs in general. And indeed, as we will momentarily see, no one appears to have been spared at least some pain. And even worse, if there is such a thing as a general sell-off, if as and when things may go lower, if there are to be SVA sell signals, at least one or two of them cannot come until much lower prices have been reached. Still, I can't let SVA get blown about in the wind, so I will review each stock and we will see what the market and SVA may be telling us right now. So let's take a close look at those FANGs and what went on in the past week. But as always, before I do, I want to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel and we appreciate it greatly. Okay, nothing much to say about Amazon except that it's kind of shaded down a little bit from that nice channel. Still, there it is, no questions. Same thing I can say for Alphabet. Again, it's in that nice channel, sort of bounded by the MSG price, 5.5 times book on the bottom, and a kind of a phantom line at the top, at least so far. Still in good shape. Microsoft has been banging against its HB2 price. That's 12 times book, and it just has not been able to break out. And I may discuss in some detail a little bit later why that might be the case when I talk about NVIDIA. Netflix, well, look at Netflix, eh? They had beautiful earnings 2 quarters ago, stock gapped. Beautiful earnings 1 quarter ago, the stock gapped. Beautiful earnings today. Yesterday, actually. What happened? The stock gapped all right, except down and not up. Why? I'll get to that in a moment as well. Meta has been sort of struggling in a kind of a way to hang on above its bubble price at 7.4 times book value. And in part, the reason may well be that when you look at all the previous highs for the stock, they always stopped at its bubble price. Again, 7.4 times book value. Broke out this time, but it is really, really struggling. And yesterday and today it's kind of slipped a little bit below the wave. So we'll need to watch that one carefully. NVIDIA has had a frightful day. Okay, it had been in a downtrend anyway, but today it not only gapped, but it gapped below its HB6. And why that is the case, I want to discuss in some detail in a moment. Apple just continues to wend its slow way down. It's being, I wouldn't say overwhelmed by, but it's meeting stiff competition in Huawei and Samsung, and it just continues to ooze lower due to the lack of earnings and sales growth. Finally, Tesla has, after moving sideways for since early April, has finally actually broken support at its bubble price, and we're going to see what happens there. The last time it got to the bubble price, it bounced. Now it's just broken a little bit below, but we're going to have to see, and I'm going to review this stock in some detail in a moment as well. So to briefly recap what happened, and more to the point, why? What I might call our buy hold FANG portfolio has certainly suffered a setback this week. Amazon and Alphabet may have been the least affected, and I would make no attempt to even consider a rethink of these two stocks. As far as Microsoft is concerned, I could not consider any revaluation of the stock to be a buy unless it could break out over its HB2, or 12 times book, which looked to be possible as the shares closed right in on that price valuation level. Far from breaking out, however, the shares are retreating from that level, even as the earnings estimates appear to enjoy a bit of a pickup in their trend. Unfortunately, any sell signal that might be generated cannot come until the shares have fallen a further 13% to their HB1 price. That's 9.5 times book. So I have to leave this as a hold for the moment. Netflix was a real kick in the pants coming out of the blue. With two nice earnings surprises in the 2 quarters, I was waiting to see what would happen this time around, and hey, the numbers were superb. So why has the stock not leapt up to and over its HB2 price, 12 times book, as I might have expected? Well, the company's second quarter revenue forecast was a bit below that implied by the consensus estimates, and that is all that was needed to bring about a bit of a nasty setback. The market is a tough taskmaster, it would seem. As you saw, Meta is trying to hang in, and I do not have a confirmed sell signal by any stretch of the imagination. I hope I was not being over-optimistic in upgrading the stock to a buy, as SVA suggested. It may be that Meta's own history of peaking at its bubble price, 7.4 times book, ultimately trumps any earnings growth optimism. For now, we'll have to see what the coming week brings. NVIDIA, that's the real conundrum, because it has given us our 3% 5-day sell signal, and possibly with good reason. A St. Louis Fed study that estimated productivity gains from past technologies, as well as the pace of technology adoption, was eye-opening. The researchers concluded that the productivity effects of AI adoption will be relatively slow by historic standards, and compared it to PC and cloud computing. Over the past 5 years, several of these surveys have asked firms whether they use AI in production. They averaged the reported use in surveys done in 2023, 2024, and compared it against reported use in 2018. The percentage of firms reporting any use of AI in production has only increased from around 3% in 2018 to around 4.4% on average across samples in 23-24. When asked whether they expect to use AI 6 months from now, less than 7% of the same firms said yes. If history is any guide, AI productivity gains may take a long time to realize. NVIDIA shareholders now appear to have not waited to find out, in which case the shares are truly expensive and risky. Apple and Tesla remain in my bad books from a fundamental point of view. Apple continues to ooze slowly and has fallen below SVA support again. Finally, Tesla has slipped below a very powerful SVA breakpoint, its bubble price. Overhanging the stock price, in addition to poor sales of electric vehicles, is an unprecedented compensation package which would award Elon Musk 12 tranches of options worth some $64 billion, dependent on the company hitting increasing steep targets related to market value, revenue, and adjusted earnings, with each tranche of options corresponding to 1% of Tesla's outstanding shares. From the looks of the stock in SVA terms, however, he's welcome to the package, because its actual delivery is another question. These are interesting times indeed. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol and Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.